Hello and welcome to this recorded virtual panel session, which forms part of the Inspire 2021 conference organized by the ILHA. My name is Stefan Haddad. I'm the academic director of the graduate school at EHL, and I will be the panel moderator for this session, which will actually touch upon finance trends in the luxury hospitality sector. I'm very glad to welcome our three panel members, Lieven Werner from IHG, Armando Diano from Marriott, and Dimitris Mites from Global Asset Solutions, who will actually share their insights on these topics based on their experience and current challenges and opportunities that they're facing. So thank you, gentlemen, for attending and agreeing to attend this panel session. Maybe we should start with the first round of questions for each of you to introduce yourself, your current position, your background within the organizations you're working for. Armando, please, if you want to start.
Welcome. And my background basically was degree in economics, as you can imagine. Then I worked for 7 years for Arthur Andersen. Maybe some of you remember the audit company that disappeared after some, problem that I had. And then joined at the time ITT Sheraton, then merged into Starwood, and then in 2016 basically merged into Marriott. Now my actual position is the area director of finance for Southern Europe, that include the country of Portugal, Spain, Italy, Greece, and Malta. And we are talking about 54 hotels managed and owned leased, because in the organization, the franchise basically is followed by the team directly from London. And then I have the executive master into the Bocconi Milan. I took it in 2005, the MBA. And that's it. I'm, here to offer, share with you all my experience.
With a focus on Southern Europe and your previous background more generally. Yeah. Thank you very much. Thank you, Armando. Turning to Lieven, please.
Yeah, thank you very much. Hello, everyone. My name is Lieven Werner. I'm from the Netherlands. I have the privilege to head up finance operations across Europe for IHG. I've been with IHG for over 20 years, and during my time I've had the pleasure and an opportunity to work in various countries across Europe, in Belgium, in the UK, and also lately about 4 years in the US, in Atlanta. I've been away with IHG for almost a year, when I had the opportunity to be the CFO for a wide label operator with brands with Marriott, Hyatt, and IHG as their CFO. All in all, 20 years, more than 20 years in the industry. So yeah, and in my portfolio today, I look after the managed and franchise hotels across the entire European estate. Thank you.
Great, thank you very much, Lieven. Dimitris, handing over to you. So I think you'll have the responsibility of, I think, representing another end of the industry, but I'll let you introduce yourself.
Yeah, hi everybody. My name is Dimitris, therefore I come from Greece with such a name, and I hold actually a Master of Science in International Hotel Management from Oxford Brookes University. I acquired a wide experience in the tourism industry, as I worked for more than 25 years across Europe, Greece, Belgium, Netherlands, Spain, or in Africa, Rwanda or Senegal, in different companies, multinational companies, such as Conrad, Swiss Hotel, Dorint, Nobu, and IHG. I spent a big part of my life, of my career in this big school, as I call it, IHG, where I learned a lot, and where I was heading Iberia and then the Qatar hospitality portfolio, one of the most prestigious of the company at that time, with hotels such as Carlton, Cannes, or the Amsterdam Intercontinental. In 2013, I became one of the 4 responsibles in Europe for the Future Final Leaders program, a program which helped us to to prepare new directors of finance within the company. And then I was even at that year awarded as the Hotel Financial Controller of Europe. One of my managers is with us, Leven, so he knows it very well. In 2015, I decided to diversify my career because I wanted to see something different. Therefore, I joined one of the most luxurious marinas in the Mediterranean, the one of Barcelona. And there I wanted to see the hospitality with from a different point of view. 3 years later, I joined another hotel. Again, I went back to the hospitality industry and I joined the deluxe hotel, the most deluxe in Southern Europe, the Hotel Nobu in Ibiza. Finally, a year ago, I joined the other side of the finance, the side of the owners. I work currently for Global Asset Solutions, a company which is helping the owners to improve their profitability, working together with the operators, and we have managed to have some really important portfolios at this moment, like some international ones. I don't want to give some names, but we're doing at this moment, we are having around 50 hotels in our portfolio, and we keep expanding.
Very good. Thank you, Dimitris. Thanks for all this these precisions. Well, gentlemen, let's maybe start with going back probably up to 20 months ago or thereabout, and obviously when the whole industry, hospitality and luxury hospitality in particular, has been impacted by the pandemic. I'd like you to share your views as to how this has really impacted your operations and industry more generally, in terms of performance, but also in terms of reassessment of growth prospects, and how this reassessment and this evaluation has kind of evolved as we went through the pandemic, from the first lockdown restrictions to the current situation. Leven, if you may want to start.
Yeah, no, it's a great question. It feels like a long time ago, but I remember first hearing about COVID-19. I'm not sure we called it that back then, but it was probably late February, early March. And I was talking to the team in Italy, where in Europe, it, as far as my recollection goes, it first manifested itself there. And we were trying to size up the impact of COVID and restrictions on bookings. And we had some citywides coming in Milan and Turin later that year. And we were doing some very high level estimates. And I remember presenting them internally, and people were quite shocked with our first assessment. Unfortunately, the reality was even worse than we saw as we predicted back then, as the matter soon turned into a global pandemic, not just impacting Asia, China, Italy, but I mean soon many other countries on the back of that. So that required us to take a lot of actions quite quickly, and many of the hotels were required to close temporarily, and we reacted really quickly, and leveraging government schemes that were out there and available for the different countries. So working through that process, we implemented a skeleton crew structure for our closed hotels to make sure that we reduced cost. We looked at our standards and capital investments that needed to be made, and looked at for hotels that were still open to see what we could suspend, what capital investments could we postpone, just to make sure that we help our owners navigate through this difficult circumstances. Over and above that, we went from doing projections on a monthly basis to doing it weekly, daily, because the situation was so volatile, and looking at cash flow forecasts, something that we used to do monthly, turned into daily, just to make sure that we understood where we were heading. On the back of that, IHG came up with plans, frameworks to support our owners through these difficult times, where in some instances there was some temporary fee relief for a couple of months, and we then leveraged payment plans to help support pressure on their working capital. Fortunately, once the situation got stable, we made sure that we revisited our commercial strategies to make sure that we took advantage of some of the domestic leisure business that was there, and putting campaigns out there to make sure that we capture our fair share, and if not more. Again, to help manage through the difficult position.
Okay. Well, I'd like to bounce back on this. I mean, you mentioned IHG has offered support to some of the owners, both financially and I think in terms of sailing through the crisis. I don't know, Dimitris, maybe from the owner's point of view, how has this period been analyzed or been experienced by the owners, and in terms of the different stages of the pandemic?
The new situation found the hotel owners unprepared somehow. At the beginning, they saw themselves to be obliged to support the payroll, the loans, the interests, and all the other expenses without having any revenues. This was not easy at all. A need for urgent restructure was there. And similar to the previous crisis, which we had 10 years ago, the owners started looking for the expertise of the asset managers. We saw requests increasing, actually. Some owners were looking for somebody with diversified experience to help them renegotiate the contracts with the operators, or to bring in new ideas from all the knowledge they had. Some others had to get rid of their assets, and consequently, thanks to so many opportunities in the market, it was the right time for others to increase their portfolio. So there was a lot of exchanges within the market. In terms now of the hotels, the owners, they were really started pushing a lot on the operators. I think they felt it a lot. As Lieven explained, there were so many requests of accurate forecasts, which was not easy to have accurate forecasts, because too simply everything was last minute and nobody could foresee what would happen. So this created a lot of pressure, a lot of problems sometimes, but everybody all together, we try to work together and to come to an end as good as possible, not the best one, but the best possible. Now, as the time went by, what is really important in the hotels was that we started seeing some recovery, especially in 2021 in the luxury market. At the end of the second semester, actually, and we saw even an increase on the stay of the clients. The guests started changing little by little, and especially in the resorts, there was a significant increase of the ADR. That's the way it has changed little by little, but it was a tough period for sure for all of us.
Okay, thank you, Dimitris. Now, just in many countries, and I think here we're covering mostly the European scene or EME scene, but in many countries there's been a strong support by states and governments for the hospitality sector or for the wider economy in general. And I'm sure this has been kind of a new experience to most of you to live through this support packages and schemes. I'd just like your views on to what extent these have been critical in sailing through this crisis for hospitality companies, but also as we're looking forward, what are the consequences of these measures today? Both the fact that they've existed, and the fact that they are being phased out in a number of instances. Armando, maybe you can share with us your experience for Southern European markets?
Sure. Let's say that the scheme were quite similar in the countries. I mean, from one side there was the support for the, regarding the employment employees and clearly the payroll side, and the other one was regarding the drop on revenues, basically to support the companies in order to not go in bankruptcy. To be honest, there were a lot of companies that were quite in a very difficult situation because, as we mentioned before, cash was king. There was no basically income at all. But there were also some, owners that has a lot of clearly cash out based on also on loans taken and so on. So in a snapshot, we can say that the support scheme from the government was quite easy. They were covering more or less 1,000 euros, for example, in Italy per employees, clearly taking out the, let's say, the directors and the executive team, clearly. This was called the fees. That is, it's really full support from the government. The problem was that, as usual, when they comes out of this kind of support, it's not really, black and white. So also interpretation, also to set up the system, the payroll system, because then what happened is that you are going to anticipate this money, but then the government is going to give it back, right? Through payment of the taxes or the social security, VAT, whatever it is. So you can imagine that there was a lot of actors in the middle, so also to set up all the system. And to be honest, also the payroll system was not set up for this kind of works, right? Because it was quite straightforward. So on the other side, as I said, there were the scheme that where the government basically give a subsidy based on the drop of revenues that compared to prior year. Prior year means 2019. We are talking about a drop of 95% in many cases, or maybe more. So although if they are willing to pay 2-3% of the variance, I mean, in any case, we are talking about 200,000-300,000 euros, or maybe more, depend clearly on the reality of the hotel. And this helped a lot, clearly, to to survive. Because here we have to say to survive. We cannot say really, to be positive for the future. No, 2020 was really surviving, and clearly, we in this the same was in Spain. Was called ERTE. That basically is a similar scheme. In Greece, there was another scheme that, to be honest, maybe Dimitris can tell because it's Greek. I cannot speak Greek, so it was quite complicated to say. But the compass was exactly the same, as well as in Portugal. So it's clear that this was really a worldwide situation, unique, right? So, or the government really give the support, or the risk is that we blow up. I mean, there was no other situation.
Okay, and Livin, I mean, we're hearing that there are consequences right now. I mean, for example, staff shortage. You could ascribe that to some of these schemes that have been put in place as well. I mean, what is your take on the consequences of these schemes and the support and the phasing out of some of these schemes?
Yeah, no, it's a good question. I mean, first of all, I would just like to echo what Amanda already said. I mean, we went through the same process for every one of our countries to make sure that we had a good understanding of what the schemes available look like, such that we could take advantage of those. But now that they're phasing out, and now if business is recovering, then it helps. But at the same time, we needed to look at our operations and our leadership structure in the hotels through a different lens, because the recovery was not going to be from one day to the next, and projections suggest that it will take, at least in Europe, to 2024 for the market to really recover. So we looked at our leadership structures within our hotels and looked to adjust those through natural attrition in most cases, or perhaps to alternative roles within the organization to really right-size those. And we devised, I should say, kind of like leadership blueprints that we held every hotel against, and then we look to see, well, where are there further opportunities to make savings. Your point on the recovery and the talent attraction, now the business is coming back, and we've had people that have been on furlough. Some of those have left our industry altogether or have left the country in some instances. So we're now needing to find ways to attract them, retain them, and that comes associated with high pressures on increases in payroll. And we're trying to make headways through our procurement organization to reduce operating costs down, such that we can create and also to drive higher efficiencies by better and more up-to-date labor productivity tools, such that we can invest in our talent and perhaps increase the pay to ensure that they are staying and retaining and staying working in our industry. So that's anything we can do to try and make margins more optimal through procurement, through labor efficiencies. A part of that is going back into labor investment, just because the market is demanding in many of our countries higher wages.
Maybe, Stefan, if I can add something just to echo to Lieven, basically, unfortunately, after what happened in 2020, the hotel industry is not really attractive. And we are seeing a lot of issue when you have to hire, because you have new opening of the hotel. We have a huge issue to find the correct talent for the correct position. There is, just to give an example, also this summer in 20, the summer was unexpected in the resort, was absolutely great, to be honest. Problem is that also with these other public subsidies that the government gave, a scheme where basically to support everybody, people prefer not to work, stay home, get paid instead of to go to work. So what happened is that in several resorts, we were not able to find people to open the outlet. So and there was a huge demand for that. So this is the, let's say, counterpart of the fantastic support that the government gave to the, I would say to all the industries, because now we are talking about the hospitality, but it was the same for many, for many industries. This is the counterpart. And clearly this is a big issue because we don't have, manwork. We don't have it. Work power, zero. So this is a huge problem also that most probably we foresee for next year.
Yeah, and maybe adding to that further is that unemployment in most of our markets was already quite low, and it's interesting to see that unemployment levels haven't changed significantly, right? So there is a need to look at it very differently to make sure that we attract the talent for our industry. So yeah, it's
what I take away from both of your comments, Lieven and Armando, is that it seems like in order to sort this issue out, and that's probably going to take some time, there are two directions. One is there seems to be a need to increase salaries in the hospitality sector to attract talent, those who may have shifted elsewhere or actually, are considering coming back. And then it's about talent retention and training in order to maintain this workforce in place, basically.
Sure.
Okay, thank you very much. I'd like to shift to another topic, which Dimitris has already alluded to earlier on, which is the relationship between owners and operators. And again, asking for your views about, whether, as we are hopefully getting out of this crisis, or maybe we will get out in the not too distant future, there is a new norm in the relationship. Have there been any kind of takeaways in this relationship between owners and operators out of the crisis, which can survive and become new practices and new standards in that relationship? Dimitris, maybe if you have some views on that.
Mm-hmm. Of course, at the beginning of the crisis, everybody was trying to survive, as we said before. All parties had to be creative and find new ways to improve profitability. Owners and mainly the operators had to decrease their staffing, and as such, everybody was trying to find new ways in order to see how the hotels should work. The owners felt even abandoned sometimes, I must say, at the beginning of the period, because the operators reduced their structure and they turned into the asset managers for help. This is a new reality, actually. Owners and asset managers had to challenge a lot, actually, the operators, who had to review all their standards, as Liv and Armando mentioned before, and they have even sometimes to waive temporarily even some fees, which was very kind of them. It was not always easy. However, as I said before, all parties understood that they have to work all together and they can work better together. Those new measures which they took actually, such as reduction of fees, such as reviewing the productivity, or the use of technology, then all those measures, they are here to stay, and they will make the hotels more profitable in the medium or in the long term. And towards that, of course, they need the help of the asset managers, because even sometimes some hotels, they had even to change the status and to flip into franchised, in order to make them even more beneficial. Or we have seen the other side, of course, some franchised hotels which prefer to go into managed. So the whole situation in the market changed. There is a new era which we have to see how this will work, but definitely something good, I think, is coming out of all this, because the profitability is expecting to increase further with the new measures which all the operators have taken.
Yes. Yes, and Levan, maybe you want to add a few things. I think what is interesting, Dimitris, is that it seems to me, working together in these very difficult times is also probably creating some kind of a sense of togetherness or trust that may not have been to the same extent previously. And as you said, rethinking a number of key issues that were dealt with in common. But Levan, is that an experience you're sharing?
Yeah, no, definitely. I think first of all, the acknowledgement that Dimitris made about having to do a lot more with less. I think that was felt by asset managers, felt by the owners, and felt by operators alike. The pressure was on everywhere, and we had reduced teams in our hotels, and leadership in the hotel was in many cases not working full time, and had more on their plate. So that was a bit of the backdrop, I think. But I like to think that this experience has brought many of us closer together, and that's because we've been placing each other's shoes, and we've been kind of shouldering together to try and work towards a common solution. Didn't mean that we always agreed on everything. There's always there's various dynamics and perspectives, of course, but we had lots of constructive dialogue and making sure that we balance the short-term gain versus the long-term impact, and that I think is a really important one. And we try to we see evolutionary changes, but between all of that, we have remained very customer-centric. To make sure that we are still, caring for guests short term and long term. What it looks like on the long run, I think Dimitris is right. Some of these things, using technology, higher productivity, new ways of working, will certainly be here for the long run. We haven't experienced the complete post-COVID world just yet, because with the winter upon us here in Europe, we do see rising restrictions and rising cases. So we'll see, but we are extremely mindful on the long-term success of these hotels, and working together, thinking very solutions focused. We are, there's a clear desire that we're in this together. We need to make sure we look after our guests, we look after our owners, our people, and our community. So I'm hopeful that we will come out of this even stronger than we went into this.
Okay, thank you very much. I'd just like to move on to another topic, which is actually the financial robustness of the hospitality companies. As they've been through this crisis, they're emerging somehow out of this situation, and especially the balance sheet impact altogether. Now, obviously, most balance sheets of hospitality companies have been quite dramatically impacted by the crisis for the reasons that you've explained earlier on. Whether we're talking about, focus on working capital and cash management to a very granular level, on a daily basis. If I'm quoting Livan, what you said earlier on, there was also balance sheet impairment issues, I believe, as well as kind of debt restructuring aspects. Maybe Dimitris, from the owner's point of view, you can share with us some light as to how this has been tackled, generally speaking. What were the key or the most prevailing issues that you've observed together out of this?
The COVID-19 found many owners with high debts. Actually, after several years of with the tourism economy rising, many saw it as an opportunity to invest further in their hotels or into the hotels industry. Some companies, some funds out of the hotel industry decided to invest in the hotels. Then the COVID-19 comes and then everything stops. The revenue shortage shrunk their working capital as the current liabilities were increasing, contrary to the current assets. Especially for the hotels that they were still in the ramp-up period. We know one quite well, Armand and myself. The pandemic was a disaster, actually. It didn't help. As a result, the owners had to approach the banks and try to find ways to restructure their debts. The banks were not always positive on that because, of course, they wanted to get back their money as soon as possible. However, they didn't have also another choice. They had no choice because they wanted to get back their money, and the only way was to proceed to the restructure. To do so, long-term plans were requested to all the owners. Cash flows after cash flows, and instead of monthly, as Livan was saying before, on a daily basis almost. And the owners, they want to demonstrate, and they were asking actually to the operators to demonstrate that they were able to increase the profitability and give the results which the banks they wanted in order to proceed to the restructure. Mm-hmm. The good thing sometimes was also that in some countries, especially in the Southern Europe, but actually all around Europe, the governments, they were giving also some loans, free of interest actually to the government, to the hotels or to the owners. And this was helping even more, but not always, I must say, depending on the debtness of each owner. And this was not easy. The positive here, this was really the positive part, having the owner, the hotel, the banks helping the owners. But that was the way. There was a lot of working together again between the owners, between the operators, and the asset managers in order to find a way to restructure those debts.
Okay, yeah, absolutely. Tough times. I don't know, Armando. I think in one of our prior discussions we mentioned impairment as well, being quite a key issue.
Yeah, basically, as we said, the main topics that we have in the financial statement and the balance sheet. One was clearly the cash and what we have done as an operator. As we said before, we have reduced the centralized services, we have reduced the fees. For such month, 6 month, 8 month, there was basically no charge at all for the hotels. But also, the hotels, as per many management contracts, I would say, they have also a FF&E reserve. That is basically, this is a percentage of revenues that you put in a dedicated bank account that is needed in order to keep the hotel up to brand, right? So this FF&E reserve was money that then we allow, where needed, the owners to use for the operational reason. So we use this money into the operational account, clearly with the agreement to refund what has been used in 2 years' time. So this is also clearly due to the fact that it's included into the management contract, this has been also clearly basically agreed through an amendment of the management contract. From the other side, the other big issue clearly was the impairment test. As you can imagine, many hotels and many companies has a quite high goodwill into the balance sheet, and this goodwill was coming when they bought the hotel from a third party. So was engaged with many of the audit company, Ernst & Young, KPMG, Pricewaterhouse, and so on, Deloitte, basically because they asked to prepare a 5 years plan. So they want to understand really when the business is back, and when they think that what we are going to, the risk that they have now today into the balance sheet, into the asset, can be basically overcome. So clearly all the projection was done in a very, at least last year, in a very complicated environment, because no one of us knows where we land in 1 year's time. We have no idea, right? So clearly were made some assumption where the business was back around 2023, 2024, maybe the leisure market, especially the resort, come back before compared to the urban hotel that have more corporate business. And at the end of the story, we supported with all the assumption review. Clearly was also together with Marriott, we agreed on the approach that we have, because all of a sudden, instead of to have clearly this plan for 3-4 hotels, you receive from 600 hotels. So the approach should be clearly based on the market, on the country, on the situation of each country. So we have such guideline, right? And this also helped also to support clearly the impairment test that, when we're talking about impairment tests, we are talking about millions of euros. So it's not really peanuts, right? That could put really the company into the bankruptcy. So, and this was the approach. So as also Dimitris mentioned, there was really, all the efforts that we can do for the owner really, to support and to overcome this situation was done clearly. No dreams, but I mean, really numbers that make sense based on the, on the knowledge that we have today from the market. So, and this was basically the main approach.
Okay, thank you, Armando. Maybe as we're kind of projecting ourselves, ahead in the future, and as well, you can provide your views as to where we think we are with this pandemic, and whether we are out of the woods yet or not. But out of any crisis, there are obviously opportunities arising, and I'd like you to hear from you your sense as to where these opportunities may be found in the luxury hospitality industry. Lieven, I don't know if you have any thoughts you want to share with us. Well, maybe first on where you think we are, and I know there's a bit of kind of a watching at the crystal ball here, but based on the current most recent data, the market recovery here and there, and the models that seem to be recovering faster, where do you see these opportunities arising?
Yeah, thanks. Well, I think first off, the recovery, I mean, obviously it varies hugely across the globe, right? So we see in China and the US the recovery with largely domestic business taking place very rapidly, right? So that's a given. I think in continental Europe or Europe across lay of the land, that's a little bit more subdued because of the restrictions. But talking about the future, I think we are very confident that the actions that we've taken over the last 18 to 20 months are going to set us up really well for the post-pandemic situation. And even during the pandemic, we have been taking advantage of some or been able to secure some longer term quality additions to our luxury portfolio. And luxury with an IG is a key factor for us, as a key sector for us, and openings. We've got some great openings that have happened. Actually, the background on my screen here, that's the Kimpton Paris Saint-Honoré that has opened this past summer. Clearly not during the easiest time, but but doing really well. A fantastic property. It's one of the few that I've actually been able to see in person over the last couple of months. But it goes beyond that. I mean, I think we've got a Regent in Kyoto opening in a couple of years. Then we're taking Six Senses to London. We're looking to open an Intercontinental in Rome next year. So those are just a few. And over and above that, we've launched another luxury brand called Vignette Collections, which focuses on seamless conversions of high quality, of unique and luxury independent lifestyle hotels. And we see that conversion makes up a large portion of signings over the last 18 months, probably about a quarter. And with having this brand Vignette and knowing the size of the market, which in the markets we're looking at there's probably about 1.5 million rooms out there that aren't branded, that would fit this envelope really nicely. So we feel really positive about this, and I think our customers are longing for one-of-a-kind stays and and hotels with real identity. So from that perspective, we're very optimistic, and we've set ourselves a target for the Vignette Collection brand to get to 100 hotels over the next 10 years. So yeah, we're very, very positive about that.
Okay, thank you, Leuven. So it seems like, it is still, notwithstanding, obviously, what we talked about, it's just still full speed ahead in terms of development and new brands, as you mentioned, and concepts altogether.
Maybe if you get something just
please.
to that in development. I mean, we are basically, two big companies, and what we are seeing now after that, this pandemic, that there is again a lot of enthusiasm in the hotel industry, to be honest. There is a lot of demand, especially in Southern Europe, especially for the resort and some cities specifically. Give an example, we signed recently like a 6 Ws in major cities. Southern Europe, the Edition brand. So it's more the lifestyle and luxury that is really going in the right direction. Now, clearly Southern Europe is more a luxury business compared to maybe other Central Europe, where it's more core, let's say in this way. But it's clear that there is a lot of investors ready to come, ready to invest. Specifically in Italy, what is good is that, with the Mario Draghi, that is finally not a politician, but is a real manager that took over, the politician in the last year. There is a lot of optimism also on what is going to happen in Italy. Same in Spain, that is more relaxed the situation, also the political situation. So what we really foresee that there is a lot of enthusiasm, and clearly this is something that from one side you can understand, but from the other side is quite unexpected, because 6 months ago, when people was leaving, all was scared about the hotel industry. To be honest, the situation and my thought was completely different. Now, honestly, after this summer that was fantastic, at least for the resort. I mean, July, August, September, October, amazing. We did the numbers. ADR was over 2019. Just to give an example, clearly the occupancy was less, but and the other main factors is that we are also dependent by what happened for the airline. I mean, if the airline start again, in Southern Europe, we have more or less 50% of the business that is North American business. So if the flight come back easily and constantly every week, then the business recover very fast. Until there are all these clearly, protection from one company or barrier, let's say, that is clearly health barrier, clearly, we need more time to recover, but I'm sure that we are going to recover. It's only a question of time. We're talking about maybe 1.5 years, 2 years, but then we get there to 2019. I'm sure about it.
Okay, so it seems like from what you both are saying, that at least on the operator side, and I'll ask the question to Dimitris on the other side, but on the operator side, there is a definitive positive view about the future, in spite of obviously the short-term constraints remaining. And you mentioned the airlines, the restrictions, but this has not impacted the long-term view of the industry altogether in the luxury segment. Dimitris, would you concur with this from the owner's point of view?
Yeah, as I said before, there is a lot of need in the market because there are a lot of opportunities, so there are a lot of changes of hotels. Hotels are changing hands. Definitely the luxury market is the one which works better than the others. The luxury market is the one which has seen its ADR to increase a lot, as Armando said, more than in 2019. And not only that, the RevPAR increase which we see comes mainly from the ADR, because we see that in some hotels, even the occupancy is there in the Southern Europe, especially the luxury travels, because the luxury market does want to travel. They still look for holidays. So this is really important to them. Now, the good thing also is that everybody has rethought of their ways of working, which is definitely good. Contracts have been revised, productivity has been revised, so this helped a lot in the new reality. This will help better the productivity. But what is really, really important is the use of technology. A lot of customers are coming back and they gravitate towards the hotels that use digital technologies to enhance the experience. This is really important to them. It wouldn't be a surprise to see quicker than expected some check-ins which are digital made, done, or even to see some apps which create a more personalized experience. Another point which is requested is the green tourism. This is something which increases as well a lot. Guests are becoming more environmental sensitive and look for programs that minimize the negative aspects of the conventional tourism. So definitely for the resorts, there is a lot of, there is a need, or there is an appetite in the market. Less for the city hotels and especially for the MICE business, which is still behind and will need some time to recuperate the level they had before, because of the technologies again, which help us have some meetings from home and not meeting anymore.
Okay. Well, I think it's interesting to see those trends that you said about digital experience, environmental friendly considerations as trends that are being accelerated post this last few years as a result of this, which actually leads me to my final question for this panel session related to digital. Well, not so much experience, but actually data management, privacy and security. I mean, Lieven, Armando, you're working for very large companies with, I'm sure, lots of data management involved. Dimitris, I'm sure your owners are being very conscious about the risks and the compliance related to requirements related to data management. And I would like to close this panel discussion in asking each of you, where you think the situation lies currently as far as these issues is concerned. We have seen notable hacking events in a number of industries in recent past. So how your organizations, the owners, are considering these issues, are putting in place the measures and the policies to tackle this internally. Lieven, if you want to start, maybe.
Yeah, no, it's listen, it's again a very good question, and it's very relevant, and it's front and center, for us and for the teams in IT and finance, but more broadly so as well. Just last month in October, it was Cybersecurity Awareness Month for IHG, and so we did a lot of training and retraining, make sure that teams are equipped with the right tools and to stay cyber secure effectively. So there's work ongoing in the background on an ongoing basis to help mitigate risk and improve our cyber security. And training for our managed hotels, our franchise hotels is available to raise awareness, and because this is obviously over the last 10 years, it's become a real industry in itself, right? So to counter that, we need to stay on top of it and stay one step ahead. And So yeah, I think it's one of those fundamentals that is there, and it's not going to go away. It's and I think yeah, technology and security and all of that, it's going to be extremely important for the next for the next 10-20 years. So yeah.
Okay, I don't know, Armando, if you want to add anything to this. I mean, where do you see the main areas of focus within this?
I mean, what we are going to see in Marriott is that we are, centralizing all the system into the clusters, and in order to be sure that every upgrade of the system is done for everybody instead of to leave it to the hotel, because I mean, mistake is always there, right? We are human. So if you can centralize and be sure that there is a team dedicated to upgrade all the system, could be operation, could be Opera, for example, from one side, could be the accounting system, reservation system, or whatever. And you are sure that in terms of security, clearly you are following the standard that the company has set, right? So this is the first one. Second, and I echo clearly Livien on training. We have all the employees are obliged to do training by year end. And just to give you an example, also my personal laptop, now we are in the situation where I cannot use, for example, USB. So this means that my computer is really locked and I can connect with all my system, I can connect to whatever, clearly emails, I can upload and download file, but if I want to use a USB to, I don't know, for a file, now that you give me personally, I cannot use it because it will be not recognized and don't give you access. So there is really a lot of concern about it. And, to be very honest, this attention has to be always at maximum. Because when you think that you have the correct antivirus, let's say, in place, you can be sure that they are 3 steps ahead of you. So, and this is, I tell you, it's a rush. I mean, you are always in delay. So the main focus should be always not to consider that you have done 100% the maximum. You are always at 80%, and they are always a step forward. So this is really, how to approach this kind of issues.
Okay, thank you, Armando. Maybe Dimitris, just how, from the owner's point of view, do you see this being addressed? I mean, is this something that is being kind of relied upon towards the operators, or left with the operators to manage, or how are owners considering this?
I would say that the COVID didn't change a lot on the technology of the cybersecurity, because too simply this was necessary always. It has been always necessary, so nothing has changed. Maybe it has accelerated a bit more because the technology also has been accelerated as well in the past years. Definitely the owners are expecting and the operators to take care of this, because they are dealing with the owners' data. But this is one of the things which, of course, the owners they try to find to have more details in when they negotiate the contract, because this can impact their business. They have their own, the owners, they usually have their own ways of their own security for their part, but in terms of hotels, they rely on the operators.
Okay. Ivan, you wanted to add something?
No, I was just going to say, I mean, PCI and PSD2, I mean, PSD2 is very relevant in across the EU right now. So making sure that hotels are ready for that. But yeah, they're table stakes, right? They're not nice to have. They are essential. So I was just going to, yeah.
Okay. Well, gentlemen, I want to thank you very much for this very interesting session and sharing your views from the different perspectives about the issues of this very uncertain world we've been living through over the past month, and we continue to live through. But if I'm taking something away out of this, is the fact that actually the industry has not only survive, but probably gain in efficiency by working together between the owners, asset managers, operators, and that has given the opportunity to kind of rethink a number of existing practices, probably to for the benefit in the future, and also based on your comments, that the future seems to be bright no matter what. It may not be in the immediate future, even though the data you mentioned, the KPIs are pretty good in a number of hotels. There may be some temporary pausing for some other businesses, and due to what is going to happen in the next few months. But the longer term trend is definitely positive. So thank you very much for that. As much as I love this kind of virtual panels, I would hope that we'll have the opportunity to meet face to face on another panel discussion, maybe next year. That would be a good sign for ourselves and for the industry. Thank you very much. And well, I wish you a nice end of the year. Thanks a lot.
Thank you.
Thank you.
Bye.
Bye.
Bye. Bye.